Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, the US Defense Department adds Alibaba, Baidu and others to a list of firms it says are connected to the Chinese military, but then pulls the list.
Plus, we keep beating the earnings drum. Rivian, Coinbase, Instacart, AirBNB, all out with their results. We'll break it all down.
And Anthropic completes a deal to raise $30 billion in funding, doubling the valuation of the company to $380 billion.
Private markets, Ed. Public markets. We do it all on this show. And we think about the macro data as well. When that CPI print comes in much cooler than expected and it gives life to the bond market, but not so much the equity market. I'm looking at the NASDAQ 100. It's actually down on the week. Look, we're just inching into the green on the day. We're off of our lows. But on the week, it has been turbulent and then some. We're going to dig into the pressures that we see on software. That's continuing. We're off by 1.3% on the week. On the week, we're off by 2.3% on Bitcoin. We're actually steady on the day, Ed. There's a lot to be digesting about some of the market signals we're getting. What are you looking at?
Later in the show, we're going to go deep on Rivian. You and I are going to talk about what's going on with this name. Up 20% in the session. At one point, up 28% and on track for its best day since its IPO in November 2021. Honestly, it doesn't even matter what it posted in the quarter gone or what it said its financials would be for this year. The stock is only trading on the idea it's on track for its next generation EV, the R2, and that will go on sale next quarter. We'll have a lot more on the earnings story. This is the big breaking news of the morning. The Pentagon added names Alibaba, Baidu, and BYD to a list of Chinese technology companies that it says are aiding the Chinese military, only to then take down or pull that list without any explanation. The moment that the headlines hit from the list going up, you saw the US listed shares of those names drop. Tencent was already on the list that had been published earlier in January. This is difficult to understand. Let's get to Bloomberg senior tech editor, Mike Shepard. Shep, I hope that I explained the chronology of events correctly there. Give us the fuller details. And my understanding is that Bloomberg News has also heard from the Pentagon, but they didn't have much to say.
They didn't have much to say at all in the way of an explanation about why this move, this list, this updated list, which now has 130 Chinese entities on it, was posted at 8:45 this morning and then shortly after withdrawn. They said they had nothing to announce at the moment. Now, Ed, this is something that's become increasingly closely watched by investors and by others who are wondering whether Chinese companies may be suffering some sort of repercussions from elsewhere in the government as well. The 1260H list, as it's known, is seen as a precursor, perhaps, or a bellwether to further measures that the government has taken against Chinese entities. And it's also closely watched in particular because we see the addition in this latest iteration that has since been withdrawn of Alibaba and Baidu, and those companies are making inroads in artificial intelligence. And this is a central point of contention and competition between the U.S. and China right now.
It's a central point of contention when it comes to OpenAI. We understand through a document that's been seen that was sent by OpenAI to Capitol Hill, all regarding their worries with what Deepseek's been doing with their technology.
Well, that's right, Carol. And this comes amid so much scrutiny on China and its advances in artificial intelligence. And OpenAI has warned U.S. lawmakers that it believes Deepseek has been using improper methods to advance its models, especially the R1 breakthrough that we saw last year and heard so much about. What they are saying, in essence, is that Deepseek has been using frontier models from the U.S. and elsewhere and copying and taking those results and then improperly, through a method called distillation, using it to advance its own models and train its models. And OpenAI went further to say that it has been raising these concerns, and we even scooped last year that Microsoft and OpenAI, who are partners, in the OpenAI venture had looked into the extent of distillation by Deepseek and other Chinese ventures. OpenAI, since in this memo to Congress, is saying that it has tried countermeasures against Deepseek, but Deepseek is seeking to thwart those. It also noted what it called a national security risk, and that is that with Deepseek, searches under topics that are sensitive to the Chinese government, and that includes Tiananmen Square and Taiwan independence, for example, those are screened out, and you do not get the answers that you might through OpenAI and other platforms.
Mike Shepard, on all the national security news, we so appreciate it. Thank you. Look, let's talk about OpenAI and its rival, Anthropic, because Anthropic's just finalized a deal to raise $30 billion, doubling the valuation of the company to $380 billion. For more, Bloomberg's Shirin Ghaffary joins us. Now, what's interesting is some of the same VCs that back OpenAI are backing Anthropic, but talk to us about the gargantuan valuation here.
That's right. So this was even more money than Anthropic, and we were initially expecting. The round went from $10 billion in initial talks to a $30 billion total. So we have a big bottom number. And we are seeing what we, have kind of colloquially referred to as double dipping, or we're seeing investors that maybe used to only focus on one big player in the AI race actually start to hedge their bets and also invest in competitors such as Anthropic, OpenAI, or XAI, OpenAI. And that's a newer phenomenon in the Valley, I would say.
We also, Shirin, now have some confirmation of how Anthropic's business has been going, right? You and I have talked a lot about how Anthropic's focus initially was on the enterprise. Tell me what the annual revenue run rate numbers are that we now have. And I guess, the reason we care so much about this round is, will this company go public or not?
That's right. We're seeing run rate go up just very quickly from the last report of 9 billion to 13. We're also seeing the Claude Code run rate in particular go up, and now Claude Code is their coding agent that's been very successful. So I think that this is showing that Anthropic, even though it doesn't have the kind of consumer reach that OpenAI does, which sort of has the Kleenex phenomenon of ChatGPT being the brand everyone knows in the consumer space, but that doesn't mean that Anthropic should be counted out in terms of being able to achieve some very high revenue projections and very strong growth, which, of course, investors like to see.
Bloomberg, Shirin Ghaffary, brilliant reporting. Thank you very much. We have other funding news. Shield AI, which makes AI-powered software to help run autonomous vehicles and other hardware like drones, is in talks to raise as much as $1 billion. Sources say the new round would double its valuation in less than a year at up to $12 billion, which would include the capital raised. Kara.
Coming up, Ed, we'll discuss the wider impact of what's been termed the AI scare trade. With Sarah Kunst of Clio Capital, this is Bloomberg Tech. Logistics stocks became the latest victims of the so-called AI scare trade. After a karaoke turned AI company, yes, I said that right, it's a semi-cab platform. It enables customers to scale freight volumes by 300% to 400%. Shares of C.H. Robinson tumbled 15%, adding to a growing list of companies where AI fears are reshaping investor sentiment across sectors. Bloomberg Equities reporter Carmen Reinicke has been across the latest. And I had to double, triple check that this particular company, karaoke turned autonomous vehicle business, it's actually just $6 million in valuation, but it rocked market caps across the entire industry.
Yeah, it's teeny tiny. And actually, the CEO told me yesterday that he had never imagined, sort of in his wildest dreams, that they would have a day like they did yesterday. I mean, their stock was up more than 20%. So we've really just seen sort of the fear of software disruption from AI trickle across the broader market into these little sectors that you wouldn't think were initially tied to the AI trade. And some of the fear in software disruption, may be founded, but it seems like there are a lot of these knee-jerk reactions, and investors are sort of turning and saying, what's next? How can I even protect from downside like this? Because, just the smallest little headline or thing coming out can send, all of these stocks off a cliff.
Caroline was on this so quickly yesterday, but I think there's some value in giving the Bloomberg Tech audience an understanding a bit what it's like, right? So that headlines are going on the terminal because there's certain stock moves, there's volatility. You have like industrials, transport, logistics teams, equities teams, like what is happening? You know, like all of these stocks are falling. Just summarize that session. We just showed a great chart, but it was severe, right? And then we still continue to see ongoing pressure in software generally from the broader story.
Yeah, finding that the tripwire can be really difficult, actually. I mean, we've seen so many things fall on pretty small things, or even, you know, like in the instance of real estate stocks last week, there wasn't a super immediately clear catalyst that drove selling in that sector. So it is definitely, you know, a team effort. You know, I'm speaking to investors as much as possible to see sort of what they're thinking, how they're reacting to these sort of like sparked sell-offs. And yeah, it's been a full collaboration, right? Because we just don't know what's next. There are so many different parts of the market that could see potential disruption here, and where, you know, these fears could spark another decline in shares.
While you were sort of calling up the CEO of Algorithm that was affecting logistics, we understand, we were speaking to the CEO of Altruist, which is the wealth management startup that had discombobulated wealth management stock market more broadly. And he too had this sort of David Goliath moment, Carmen. But what's so interesting is Ed and I speak a lot to the VC-backed companies that are developing the latest autonomous vehicles in trucking and bringing up these new platforms. How discerning are investors starting to become to a headline risk, or actually what is going to upend the industries they put money into? Because is really a $7 million algorithm company going to do that?
You know, I think we've seen actually really a lack of discernment, right? Everything is a very knee-jerk reaction now. I keep hearing people say over and over something along the lines of, you know, sell first, ask questions later. And I think actually what I'm hearing from, you know, fund managers or people on the street is they're looking or trying to impress sort of maybe more discernment on investors. So they're not sort of making these very like snap decisions. We'll have to keep seeing what happens. It's definitely been, you know, a wild few days.
Bloomberg's Carmen Reinicke, you've been brilliant for a number of weeks in a row trying to explain what's going on. The AI scare, it sent market caps across stocks in multiple industries tumbling. We've just explained that. But all that disruption hasn't hit top lines. That's notable not just for public company shareholders, but for private market investors who are trying to find their next win. Sarah Kunst, managing director of Clear Capital, a generalist VC firm, multiple software companies in its portfolio. Sarah, that's your job, right? Like you know, in the case study of a software name with a $6 million valuation that spooked an entire logistics sector yesterday, you want to be finding those names. Through that lens, what's your interpretation of what we've seen this week across multiple sectors where software is coming for it?
Yeah, I want to find companies that are going to disrupt markets because they have a great product, not because they have great Twitter fingers. And so I think part of what we're seeing right now that makes investors nervous on the startup side, private investors, is that we want to make sure that these companies, these CEOs who are going viral with these sort of, hey, guess what, everything's falling apart, that they actually have an interesting solution, because otherwise they're just sort of a megaphone,
right.
Not necessarily a unicorn.
I said software coming for it. I meant AI coming for it, even coming for existing software platforms. Is there real risk to established industries here imminently?
Yeah, I think that there's risk long term, but the reality is that a lot of that risk is going to be sort of taken up by companies in those industries. So it's not like logistics is ignoring what's happening, right? When you look at some of the bigger logistics players, you have companies like the Nordics who have been consistently sort of ahead on software investing on their pension arm. So they're obviously, I'm sure, having those kinds of conversations. And so I think it's a little bit flippant to think that you're going to end up in a situation where logistics didn't see this coming. Of course they know, and they're often placing bets into startups or building and buying technology in-house that can help them sort of be a part of that change. Kind of the same way in oil and gas, we've seen them often also get some upside as it transitions to a cleaner energy.
Ed makes a great point in our chat that you would have thought Flexport would be the company that would be upending the future of transportation and logistics AI. From your perspective, how are you at this moment seeing the valuations in startups reflecting this FOMO or this fear factor you see in the public markets?
There's a huge barbell right now in valuations for startups, and what you tend to see is there are a handful of companies, mostly in AI, like Anthropic's giant round, like some of what Elon's doing with his various companies, like OpenAI, where those private names are going up and up and up, and we all have no idea how they're going to make that money back in an IPO or ever be profitable. And then on the other hand, you have startups that aren't promising the world, and we're seeing a lot less velocity in those startup fundraising rounds, not because there's anything wrong with those companies, but just because people are worried about, hey, if all of the capital intensity is going over there, do I really want to be in these sort of solid, interesting, slower growing companies that might actually end up being profitable, but don't feel like they're going to be multi-trillion-dollar IPOs?
Are there any solid SaaS companies out there right now?
I think there are a lot of solid SaaS companies. I mean, even in the public markets, you look at names like Salesforce and you have to kind of ask, why do people, even though the valuation is a bit high, why do people think that this is going to go away overnight when they look inside of their own companies, they're not in a rush to cancel all their contracts and just YOLO everything into ChatGPT. But for some reason, there's this thought that that is going to happen overnight in the larger market, and all of these companies are going to be valueless.
Sarah Kunst, looking at your portfolio right now, we appreciate it. Managing Director of Clio Capital. Coming up, we're going to speak with a software company. Twilio CEO, Khozema Shipchandler is joining us. The latest earnings, they were good. This is Bloomberg Tech. Shares of Twilio holding on to gains were up 2.4%. The company posting solid fourth quarter earnings results and guidance, driven in many ways by gains in voice and messaging. The company also issued its revenue forecast of about 14% that topped analyst estimates. Twilio CEO Khozema Shipchandler is with us. And Khozema, what's driving the adoption? You talk about becoming sort of a foundational infrastructure layer. What does that look like?
Yeah, I mean, I think what it means is that companies increasingly they've always been using us for communications and for data, but increasingly they're pointing their workloads towards us, and I'm talking about AI companies as well as enterprises, as infrastructure that allows them to connect the LLMs, the data warehouses, the agents that they're now starting to build with, and telcos, put all of those different capabilities together under one platform, and that's, I think, what uniquely positions Twilio.
Uniquely positions you against this so-called SaaS apocalypse. How much, Khozema, did you get questions on an ongoing basis from investors saying how resilient is the way in which you charge customers?
Yeah, we don't get as many questions about that topic, actually. I mean, I think the reality is that, we've always been sort of an infrastructure provider, and so there's some level of insulation in that way. Like, what we do is like very unique. I think the other dynamic that is at play here is that our pricing model has always been usage-based. And so, if you're worried about what the terminal value is associated with seat licenses and stuff like that, like that's not something that we think about day to day. Instead, we think about how do we combine all of these different elements that are coming to the fore to create a great customer experience on the other side.
It's great to have you back on the show. Going back to basics with Twilio, I think really helps the audience understand, right? Twilio does customer engagement. And on the show every week, Caroline and I get told that the area that is most imminently ripe for improvement is call center, essentially, that kind of domain. The analysts are looking at the results and the outlook and saying that you might be being a bit conservative and a bit muted. They want to see more evidence that voice AI, as an example, is really taking off. What do you see on the ground, so to speak, Khozema?
I mean, look, we want to see more too. I think we feel pretty good about the outlook. We feel great about the way that 2026 is shaping up so far, and we're pretty positive on it all. I think as it relates to voice AI specifically, since that's kind of where you started, I mean, I think you're seeing tremendous velocity from a number of different companies. We called out a number of them in our most recent earnings. just take an example like Sierra, like they've really captured the imagination right now in this moment. We're lucky to have them utilizing our infrastructure to be able to grow with a customer like that and add different kinds of voice capabilities to the speech to text and text to speech capabilities that they offer. So I think that's really been exciting and interesting for us. And then I think looking forward, there's a number of other growth vectors that we're looking at. This idea of having persistence, memory, context, being able to combine all of that also with agent building capabilities, I think that's what creates durable tailwind for our company.
The usage-based model, as you just described it, it's a great advantage for you, right? And I think, again, just going on the reaction to earnings, some of the concern is that if the outlook for the rest of the year is conservative, how much is that because you don't have visibility that far afield on a usage-based model from your customers?
Yeah, I think it's less about that. I mean, I just think the dynamics of a usage-based business maybe cause us to be a little bit more conservative about the way that we forecast and the way that we kind of call it. I wouldn't take that as signal that there's any dampening of optimism in terms of our business. Quite the contrary. I mean, the signals we're hearing from customers are that they want to go all in with Twilio. Again, not just communications and data, but to build their entire AI stack around a lot of our infrastructure, including a number of other companies, obviously, as well, who we'll end up partnering with. But I think this usage-based pricing model, like, ideally positions us because it matches a customer's revenue events with our revenue events. And so our incentives are very, very tightly aligned.
Because, I mean, there's a lot of fear, there's a lot of anxiety, not just in investors, but in people writ large around AI at the moment. How are you thinking about that around your own labor force and about how you make your business as efficient as possible by adopting the tools with which you're currently building upon?
Yeah, look, my personal view is that I don't think AI is per se coming for the workforce. I mean, I think, frankly, it's going to be tremendously additive to the workforce. Like, I've got a kid in college. I've got one that's about to go. I actually think what's about to happen here is that over the next 5 to 7 years, you're going to have a whole slew of college graduates who are AI natives who are going to add so much more interesting and intellectual capacity to the workforce that I actually think workforces could potentially grow in many ways. I think what is, probably a certainty is that those who don't retrain or reskill with different kinds of AI capabilities, they're probably more at risk. And, we're working hard to make sure that our workforce is retrained, reskilled. We're adding a number of different capabilities to our own internal tech stack. There's a number of things that we're doing to use AI inside the company. Ed, you pointed to customer service a moment ago. We're certainly using it there. Inbound sales, we're certainly using it there. And I think there'll be a lot more other things that we do going forward.
Khozema, Shipchandler, embracing it. We thank you so much, Twilio CEO there. Coming up, we'll take a look at AirBNB and Instacart's earnings. Still coming thick and fast, folks. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. At the top of the show, our top story was US-listed shares of Chinese technology companies. The Pentagon briefly listed Alibaba, Baidu, and BYD as being names that it considers as aiding the Chinese military. Then that list was pulled from the internet, essentially. Nvidia also down 2%. I'm not drawing a causal link, but remember that in Alibaba's case, and Baidu as well, they are big potential buyers of Nvidia GPUs if that is a transaction that's allowed to go through by the US government. Also, taking a look at shares of Amazon, Caro, we are teetering on the edge. They are flat as a pancake right now in the session, but had been headed for their 9th straight day of declines following that monster capex outlook for the year. 9th straight day of declines would be the worst losing streak since 2006, which I guess if you look at the right-hand side of that chart and the slide gives you a sense of anxiety right now with capital expenditures. Also looking at Rivian. Yeah. So Rivian really on a tear. Remember, it was down 30% almost year to date. It's now up 24% in the session. Doesn't really matter what they posted in the quarter gone, but they're basically on track for their next product, the R2, and that's all the market cares about.
I mean, talk has about the R2, because it's got to be able to inspire purchasing at a time where we've taken away some of the support from the government and we are seeing just EVs on a downhill trajectory.
Yeah, Rivian to date had 2 premium consumer products, the R1S SUV, R1T pickup, and it didn't have a mass market product. The R2 is supposed to be that. It's still at a premium price point, and Rivian and its CEO RJ Scaringe have basically argued there isn't much out there below $70,000 for the everyday family, in the SUV form factor. It's like the Toyota RAV4 of EVs, and all they're saying is that things are going as they said they would. And that chart there tells the story. That spike that you see around December, that's when they announced all their AI plans, right, which we went deep on, and then it faded because there was a lot of anxiety that they'd fall behind on the actual product delivery.
I mean, they have been cutting costs, right, per vehicle, more than $7,000, like in lockstep with the amount that you're now not getting in terms of subsidization. But it's interesting that the delivery numbers, are they optimistic? Is it positive to be between 62 and 67,000?
It's more than last year, but it still is low volume, right? And they're still going to lose $2 billion this year, and they're still one to watch, though, because of all the people that back them and the hype around their tech. Elsewhere in earnings, strong demand for travel helped boost shares of Airbnb. Bloomberg's Natalie Lung joins us now. Airbnb, what's the story here? What are they doing that's new, that's different, and that's giving them a boost?
Last year, they rolled out a Reserve Now, Pay Later option in the U.S., and that's really helped boost bookings, letting people book in advance without worrying about their budgets so much. And they're expecting to roll this out to more markets globally, so that could continue to help the results. And this year, CEO Brian Chesky really put a big focus on launching new businesses. Yesterday, he talked about possibly testing airport pickup services, and we also know they're testing grocery delivery for guests.
We're up 4%. At one point, we'd been up almost 10% in the session. I know we're here to talk about tech, Natalie, but does Airbnb tell us anything about the kind of health of the travel industry right now and the consumer around the world to spend money on travel and experiences?
Yes, so U.S. travel has been pretty strong, and especially strong in their international markets as well, which are growing at almost like twice as fast than their core markets. They called out Brazil, Japan, and India has also seen a lot of first-time bookers for them.
Let's talk about the strength of groceries. Instacart, really impressing investors, Natalie.
Yes. Yesterday, they provided a first quarter guidance that could be their strongest quarterly growth as a public company. So that was really positive news for investors. Instacart has seen this sort of moderating growth in the last few years, and this has really seen them accelerating as they lowered the minimum basket size needed for free delivery. That's really helped. Their partnership with Uber, allowing people to order takeout, has also helped with demand.
What about the underlying technology and how much AI is becoming a flywheel for them or not?
Yes, they're continuing to push out new technology solutions for grocers, such as their white label website building, and as well as other recommendation engines for grocery. And that has powered a third of their revenue, and they continue to expect it to grow this year, including pushing internationally with Costco in Europe.
Bloomberg's Natalie Lung. We thank you so much on our earnings roundup. We've got more of them. Coinbase. Well, it showed how quickly a cooling crypto market can pressure even one of the industry's most diversified exchanges. Revenue in the fourth quarter tumbling 20% to $1.8 billion. That says falling token prices drain trading activity across digital assets. This is the company's stock is already down nearly 37% year to date, but it's got a bounce today. Katie Greifeld, I'm pleased to say, joins us, host of the Crypto Show. And what everyone is trying to get to grips with is it, have we found a bottom here? Is this bad and as ugly as it gets?
That seems to be the explanation for why you're seeing shares bounce and then some. Coinbase currently up about 16% at the moment. That is its best day since June, which looks unintuitive when you consider some of the actual numbers that we got last night, which weren't great. Transaction revenue coming in soft. You also had trading volumes coming in lower than expectations. But as you mentioned, I mean, shares were down 37% through yesterday's close. We also had Robinhood report a few days earlier. Their crypto business drove a net revenue miss for that company. So it wasn't necessarily surprising to see these figures. Right. And the idea here is now basically that exactly that. We're looking for a bottom that maybe the worst is already priced into this stock.
Katie, I'm a little ignorant here. You know, like crypto from a sort of asset perspective is not something that I spend a huge amount of time on. What I was trying to ask earlier in the week is, I get when volumes are down, that's not great, right? That's kind of logical. But there's been so much volatility. So I thought that in an environment where there's volatility, a name like this would do really well, right? Because you're on one side of the trade or you're on the other.
Well, you're not wrong for thinking that. I mean, volatility, that's typically good news for exchanges across any asset class. But consider the movements that you've been seeing in the price of Bitcoin. It hasn't necessarily been two-sided volatility. It's really been dropping like a stone over the past several weeks, which isn't a great environment when it's a one-sided trade here. But, I mean, as Caroline mentioned, this is a fairly diversified business. They've been trying to move away from just that reliance on spot trading. They have an interesting revenue sharing agreement with Circle, so they're exposed to stablecoins, which is seen as much steadier. And another reason why you are seeing the shares prop today is there's some optimism that maybe we are going to see that market structure bill that's currently working its way through Congress actually get some action in the next few months, maybe actually make its way over the finish line. So that's why you're seeing maybe also the price of Bitcoin itself pop a little bit today.
Clarity on the Clarity Act. Who'd have thought it? Katie Greifeld, thank you so much for joining us today. Meanwhile, let's stick with more earnings. I want to just take you to Applied Materials, because this is the equipment maker of the US for the chip makers. We are up 9%. Stellar set of numbers, managing to prove to the market that even though China is pulling away in terms of orders, we're actually seeing just the drumbeat of more and more investment in data centers. Of course, that means equipment manufacturing that is needed for chips to go into those data centers. Applied Materials benefiting off the back of it. We're up 8.9%. The CEO sounded pretty bullish, Ed.
Etching and deposition gear, absolutely essential. Let's go to space. SpaceX
Go
capsule.
Dragon and Godspeed Crew 12.
And liftoff. Freedom flies bound for the International Space Station. 1.7 million pounds of thrust now propelling Falcon 9.
Got ahead of myself there. SpaceX capsule carrying 4 crew members from the US, Europe and Russia launched overnight to the International Space Station. The start of a planned 8-month stay in orbit that will include research on meditation in space. They'll be joining 3 other astronauts aboard the ISS, which has been operating with a skeleton crew since the first ever space medical evacuation, you'll remember,
Great news.
in January. Karen.
Meditation. We need to do more of it on Earth, let alone in space. Brilliant. Thank you, Ed. Meanwhile, coming up, Ben Sun from Primary joins us to talk about the venture firm's latest mega fund. This is Bloomberg Tech. Early-stage venture firm Primary has just closed a $625 million fund. That brings total assets under management to $1.65 billion. And it's at a time when investors are still really eager to back startups at the seed level. Let's speak to Ben Sun, Primary's co-founder, general partner. Ben, the size and scale of the funds are getting bigger. Is that because we're seeing more opportunity to fund more companies, or because each individual seed company needs more money?
I think it's a combination of both, Caroline. And if you look over the last decade, the seed market has grown from $5 billion 10 years ago, and this is just what was invested at seed in the U.S. in 10 years ago in that year, to last year being about $20 billion. So we've seen 4x the amount of capital. In terms of round sizes, on top of that, round sizes have gone up from $1 billion to $4 billion as well. So again, a climb of about 4x.
Are you seeing returns, though, that vindicate such bigger bets at the seed level? Where are you deciding to double down on companies? Do you just stay at seed? How do you think your own DNA changes in this moment?
Oh, I think if you look at historically on the exits and the size of outcomes in both the median and the decile, you've seen that each kind of generation of startups just gets a step function higher and higher. And now with what's happening in AI, we think the outcomes are going to be that much greater. And so the amount of capital going in, it matches the quality of the talent, but also the quality of the opportunity. And with transformations like AI, we think, and the market thinks, those opportunities are going to become, and those outcomes are going to become bigger than we've ever seen before.
Ben, some of the data you were just referencing, I wrote my column about this on January 26th. There's no point calling it a seed round anymore. Mango seed, coconut seed, avocado seed. But the scale is not just different. You're basically making a bet sometimes on just 2 or 3 people in the AI lab context, for example. Is that more disconcerting in the moment when you do a seed round based on, maybe an alumni of a bigger tech company or someone that's going it alone in this environment?
Yeah, people look at historical data and they say, well, the round size has gotten bigger, so it has become irrational. The reason why they have become bigger because it's become more rational. Think about the founding talent alone. I started my career as a founder 30 years ago. What we knew about the internet and how to scale a technology company back then, it's night and day to where you see the market and the type of talent you have now. A lot of the talent are coming from best-in-class tech companies that have gone from zero to $1 billion type outcomes, if not more. And that talent is coming out and starting new companies. And then on top of that, the scale and the quality of their ideas are just getting better and better. So I think the capital going in, the valuations are climbing. These are just markets being efficient and saying, well, the talent and these potential outcomes look like they have much more upside and therefore kind of demand those type of premiums.
The seed market is very broad. What are the corners of the technology industry or opportunities where the technology just doesn't exist yet?
The big unlock, as you know, is around kind of AI. And this is at the infrastructure level all the way to the application level. And the opportunities that we're kind of seeing across all different types of sectors is becoming evident that really AI is being able to unlock what is a much larger TAM than historically you've seen before. Before, we used to talk about TAM as like software budgets. AI is replacing or augmenting human labor. And when you think about that type of replacement augmentation, we're talking about a market that's trillions of dollars, not hundreds of billions of dollars. And that's really kind of the opportunity that we see. And it's happening in all different sectors, whether it be fintech, healthcare, industrials, throughout the enterprise, all the way to SMBs and consumers. So across the board, we think there's going to be huge transformations, especially with AI.
Ben Sun, General Partner at Primary. Great to have you on Bloomberg Tech. Thank you very much. Kara, so many more news headlines to get to.
There are. It's time now for Talking Tech. And first up, ByteDance is in talks to sell its Moonton video game business to Saudi Arabia-based Savvy Games for more than $6 billion. It's all according to reports from Reuters, which says the parties could finalize a deal as soon as this quarter. Bloomberg has reported that the companies revived sale talks late last year. Plus, day one data centers. Well, it selected banks for a US IPO that could raise $5 billion, according to sources. They say the company, which is backed by Chinese data center operator GDS, is targeting a valuation as high as $20 billion, a listing that may take place as soon as this year. And also looking to go public in the United States is SoftBank's digital payments provider, PayPay. The company could list as early as March, according to the public filing. Now, PayPay is seeking a valuation of more than $10 billion, though SoftBank founder Masayoshi Son is pushing for as much as $20 billion, according to sources. Ed.
Okay, coming up, social media is having a rough start to the year. But is the bad press slowing the industry's growth? More on that next. This is Bloomberg Tech.
Social media's impact on teens, well, it's never been more scrutinized than it is right now. With lawsuits in the US over addiction allegations, Australia's ban on under-16s that could actually spread to Europe. But are these moves actually crimping the industry's growth? Bloomberg's Kurt Wagner, who covers social media, joins us on this. You wrote a piece, your Tech in Depth piece, that kind of shows that, no, it doesn't actually affect the business model. Thus far, it feels like.
Yeah, and I think there's two elements here. The first is the volume of accounts that have been removed. And again, these bans right now, to be clear, this is only happening in Australia, Caroline, right? So there is potential that this could become a real global problem. But the number of accounts that are being removed are drops in the bucket for these companies. It's maybe even a rounding error in terms of who they are losing. And then on top of that, I think if you talk to people who study this industry from a business standpoint, a 15-year-old on Snap, a 15-year-old on Instagram, that is not a super valuable user for these companies in terms of revenue. They don't usually have a lot of disposable income. They're not making household purchasing decisions yet. And so the point of this story here was mostly to say, right now, this is not a real threat to the business of these companies. It could be down the line, but I think that's something that, might be years away if it ever comes.
The extension of that last part is that many of these names still rely heavily on advertising as source of revenue. There's obviously subscription in some cases, which is a different model. That would suggest generally ads are healthy right now. What are you seeing?
Yeah, I mean, all of these businesses continue to grow their ads business quite considerably. I think it was Meta was more than 20% year over year. I mean, this is a company that's been around more than 20 years, as you know, and they still figure out, how to grow that ads business. And so I think there is a lot of money still pouring into these companies. And again, it's just, where is that money being targeted? It doesn't feel that teens, while they're important, again, to create a vibe around a platform, to create buzz around a platform, they're not necessarily who advertisers are looking to get right now. And so I think that's where, again, there might be some delay in how these types of bans impact the business.
And push us forward, though, Kurt, because we are going to see some key executives have to come up against arguments in court. Look, we all remember the pictures of Mark Zuckerberg being confronted by parents holding up signs. That moment resonates with a user base and a potential customer.
It does. We're expected to hear Mark Zuckerberg testify next week in Los Angeles in a big trial that's all about whether these platforms are purposefully addicting teens to, Instagram, Snap, TikTok, et cetera. And so, there is a reputational element to this. And I think while I say that the business might not be impacted now, if you get a whole generation of teenagers who stop using these products, that is not good, right? That is not good for Meta, right, that these people are now going to go spend time elsewhere.
Bloomberg's Kurt Wagner, thank you very much. Some of the biggest players behind the AI boom are taking a page from the crypto industry's 2024 playbook, working to back congressional candidates who favor a lighter regulatory touch on AI. For more, Bloomberg's corporate lobbying reporter Emily Birnbaum joins us now. And these are names that are familiar, right, across the top tier of venture capital and the frontier labs. Explain this playbook they're trying to replicate.
So the memory of Fair Shake, crypto's big PAC, looms large over Democrats and Republicans in Washington. They spent huge sums, hundreds of millions of dollars, and were very successful. And so now the AI companies, including both Andreessen and Horowitz, who also gave to Fair Shake, are pouring millions of dollars into congressional races across the country. Last time, the crypto industry won by not talking about crypto, instead boosting candidates based on issues that are popular in their district. And that's exactly what the AI industry is going to do this time with their PAC. It's called Leading the Future.
What can they do to dial into where the electorate is at the moment? Because when it comes to AI, there's a lot of anxiety, a lot of labor anxiety, for example. Where are they going to post the opportunity to them?
Yes, so I think first there is increasingly a lot of anxiety among constituents about AI, particularly about employment, particularly about data centers being built in their backyards. So I think for the AI industry, they're going to be making the argument that this is good for American dominance over China, that they are the innovators of the future. We'll see how that plays. But more than anything, I think they're working with strategists in each of these states states. And you can see in their advertisements, they're focusing on ICE in New York. They're focusing on Trump ally, his MAGA accolades in Texas. We're going to see that play out over and over. And people in those states don't necessarily know that it's the AI industry behind these advertisements, mailers, texts coming to their phones.
Fascinating. Bloomberg's Emily Birnbaum. We must get you back on that story, and do go read it. Meanwhile, that does it for this edition of Bloomberg Tech. What an extraordinary week, Ed.
Yeah, and in the United States, at least, a holiday weekend for many. Recap the show and the week on the podcast. You know where to find it, all those places online, and all of the Bloomerverse. Have a great weekend. This is Bloomberg Tech.